Hey everybody, what's up? Hope everybody had a nice Christmas. Market up 1,084 points today on the Dow. That's a 5% move up. Nasdaq, I believe, up about a 6% move. S&P up 5%. So a big jump today. Um, Most likely, we'll see a continuation from this rally. But one of the things I want to point out is I guess the catalyst for this was Trump tweeting early today that you got to buy the dip. The market is a buy down here, which she's absolutely correct. But the market has been a buy now for a number of weeks as it has been coming down. But what I want to point out is this kind of emotional behavior, this irrational behavior, how investors have been reacting to every single tweet or comment made by Trump or some high placed administration official, whether it's from the Fed or whether it's from something that Mnuchin said or does. And this is completely erratic, irrational, emotional behavior. The selling, a lot of the selling, came about as a result of just reflex reaction, pure emotion to something that was stated. I mean, we can go all the way back to the beginning in April, maybe late March, with the comments about the trade war. And I pointed out in many videos and broke the numbers down for you how the tariffs that were being placed on Chinese imports would have a very minor impact on U.S. GDP and vice versa on Chinese GDP. Nobody broke down the numbers with the exception of myself. I put it out there. I sent it out in emails to subscribers. I talked about it on these videos. Yet there was this hysterical reaction in the markets whenever there was any mention of the trade war, the so-called trade war. That's completely irrational. It's erratic behavior. It's emotional. It's highly emotional. And we have seen this all along the way. The only real move that was based on actual, you could say, market manipulation, price setting, was the decline in oil prices when the Saudis, basically MBS, Mohammed bin Salman, caved in to Trump's demand, and he did that because Trump was protecting him from any sanctions that could have been applied as a result of him ordering the murder of the journalist, and he agreed to lower oil prices, the Saudis being the principal, you can call them the monopolist when it comes to oil price setting. That was market manipulation by the monopolist, setting the price down. But since earlier this month, when OPEC agreed on a new round of output cuts, basically the conditions are now being put in place for a rebound in oil prices. But there was continued hysterical selling after that. As far as the stock market was concerned, yes, back in October, September, a lot of stocks and the market in general was somewhat overvalued. I wouldn't even say it was extremely overvalued. It was slightly overvalued. So a correction was normal. And as a matter of fact, I sent out on October 4th an email, and I think I posted a video up here saying that a significant, and those were my exact words, a significant correction was coming. So I absolutely called the top on that. Problem is, once we had that pullback, I saw levels that to me looked like attractive levels to buy. But the hysteria continued. It kept selling and selling and selling. And by the way, now if you look at the forward PE of the S&P being under 15, right around a 7% earnings yield. And if you look at a 1-year T-bill, what are you getting on that? 2.5. A 2-year note, what are you getting on that? 260 maybe. a 7% earnings yield on the S&P 500, that's a very attractive yield. And as I said, the PE, which is the inverse of the earnings yield, or the earnings yield is the inverse of the PE, is now at a 5-year low. So there is very good valuation in the market right now. And that will eventually be seen, if it's not already being seen today. Again, I'll mention the catalyst saying, Trump saying, you got to buy the dip. And of course, he's going to take credit for that. And he should, by the way. You had to buy the dip a long time ago, but the thing just got hysterical and kept on going. You also have to understand that a lot of this market activity is driven by algorithmic trading, basically computer trading. And what they do is they all chase price. They all go in the same direction. So when they're selling, they're all selling. When they're buying, they're all buying. So you tend to get these exaggerated moves, extreme volatility as a result of these black boxes, basically. But as Warren Buffett once said, he actually was on record as stating, you never know how far investors can sell down the price of stocks. But if you focus on buying good companies at attractive valuations, you're going to be okay in the long run. And how can you argue with a guy who has basically, adopted that attitude and is worth $90 billion? Remember, Warren Buffett, he made his fortune by investing in the stock market. Never created any company, never created any new industry, never invented anything new. Stock market investing, and he's a value-based investor. So, hopefully this is the end of this hysterical period. As I've said before, if you look at all the important metrics of the economy, if you look at bank credit, not only at all-time record highs, but accelerating higher. And by the way, that acceleration really started to take place in the month of November when the stock market was already on its downslide. So we had a period from March basically through October when bank credit, loans and leases, the growth of those things were slowing down very significantly. Stock market started to go down, peaked out late September, early October, started to sell off. And in November, we saw bank credit, loans and leases, all those banking metrics, assets held by banks, bank residual, which is the net worth of banks, all that stuff started to accelerate higher, even while the stock market was going down. If we were actually in an economic downturn, an economic contraction, you wouldn't see that happening. You would start to see very significant contraction in the banking metrics like we saw in 2008, 2009. That didn't happen. Fiscal support has always been there in record amounts. I've been talking about that. We're already up almost $100 billion over last year in terms of total government spending, and last year was an all-time record. So this year we're going to easily break that. Industrial production up, capacity utilization up, all of these metrics of the economy. The labor market still strong. As a matter of fact, if you look at unemployment benefits being paid out, they are falling year over year. And if there was softness or weakness in the labor market, you would not see that happening. So all these things have been very, very supportive, or giving an indication of strength in the economy, even as the stock market has been falling. It's been falling for 3 months, and there has been no deterioration in those economic metrics that I just talked about. You would have seen that by now. There would have been some indication by now of some weakness in some of those numbers. Just not even that there wasn't weakness. We've seen an acceleration higher in those numbers. So there you go. This is a correction. It got out of control because of the computers. And hopefully now it's over. But long-term, stock market will head back up. We're at very good valuation right now. And hopefully this is a bottom. All right, everybody. See you tomorrow. Bye-bye.